We are doing the second part of the basic explanation of the incomplete records. So let's see. In incomplete records, your main purpose is to find out profits. And you can find out profits by preparing either a capital account or by preparing an income statement account. In the income statement, when they ask you to find out profit, they will not give you purchases and sales directly. You will have to find out the purchases by preparing an SLCA account, and you will have to find out purchases by preparing a PLCA account. Now, one thing that you have to note here is that when you prepare an SLCA account, you will get your you will get your sales, but SLCA will only give you credit sales. From where will you get the cash sales? So the cash sales, you will get it from the cash book. So cash book is a book that you make where all the money coming in is recorded on the debit side and all the money going out is recorded on the credit side. So when you do cash sales, money is coming in. So cash sales will be found on the debit side of your books. So the other way to find out profit is to prepare an income statement where you will find out your sales and you will find out your purchases. You should know that sales or your revenue is a summation of cash sales plus credit sales. Cash sales will be found out from the cash book debit side, and credit sales will be found out in your debtors account or your SLCA account. Similarly, your purchases is made up of cash purchases and credit purchases. Cash purchases will be found out in the cash book. Which side? The credit side. Because when you purchase, the money is going out. And the credit purchases will be found out in the PLCA. Now, another thing, you can also find out profit with the help of capital account. They say that to find out profits in incomplete records, you need to know your opening capital and you need to know your closing capital. If your opening capital is not given, then you will prepare your opening balance sheet. And your opening balance sheet is the same as opening statement of financial position. But in incomplete records, your statement of financial position is called the statement of affairs. Statement of affairs. So, a statement of affairs is the same as statement of financial position. Accounting equation. You know accounting equation. Capital plus liabilities is equal to assets. Another thing you should remember, sales is equal to cash sales plus credit sales. From where will I get cash sales? I will get cash sales from cash book, debit side. Credit sales from SLCA account. Purchases is equal to cash purchases plus credit purchases. Cash purchases, I will get it from cash book. Credit side, because money goes out. Credit purchases, I will get it from PLCA. Opening capital plus profit minus drawings make the capital account. Opening capital comes on the credit side. Profit comes over here. This you will do the total. From that, you will subtract the drawings. So opening capital plus profit minus the drawings will give you your balance closed down. And this balance closed down is nothing but your closing capital. So this is closing capital. Closing capital minus opening capital. So suppose you start your business with 100,000 and at the end of the year, your capital balance turns up to be 130,000. That means I started with 100,000 and now I have 130,000. So closing capital minus the opening capital will give me something which is called the profit. My profit in my example is 30,000. Profits retained in the business. Profits retained in the business plus your drawings is called what? So from the profits, if you're going to subtract your drawings, profits retained in the business minus the drawings. So from the profits, when you're going to subtract your drawings, you will get your closing capital. When I say profits retained in the business, that means all the profits that is kept aside in the business. I assume there is no opening capital. Or profits retained in the business adds up to the capital. From that, when you subtract your drawings, you will get something which is called closing capital. Now, how would you calculate profit when no details of purchases and sales are given? So this is very simple. If no details of purchases and sales are given, profits is calculated by preparing the capital account. You will have your opening capital on the credit side. You will have the closing capital on the debit side. If you have any drawings, it will be over here. If you have any additional capital, it will be over here on the credit side. Then you will have to find out the profit. How do you find out the profit? Closing capital, in that you will add drawings, you will get something which is on the debit side. From that, you would subtract the opening capital, you will subtract your additional capital, and you will get profit as your balancing figure. So when no details about purchases or sales are given, then you have to calculate profit using this formula, closing capital minus opening capital. Why do I use this formula? Because I am doing incomplete records. If I am doing incomplete records, it means that I do not have any journal. I do not have any ledger. I do not have any balances. I do not have any records. I only know that I started my business with this amount. At the end of the year, I have this amount. So what I am left with is profit. So profit is closing capital minus the opening capital. Opening capital means the money with which the owner starts the business. Okay. And closing capital means the money which the owner has at the end of the year. Now, this is a question that you need to answer. What are two important things that you need to find out profit in case of incomplete records? Two important things. One is closing capital and one is opening capital. These are the two things that you need to find out profit in case of incomplete records. If closing and opening capital is not given to you directly, then what do you do? you will find it. How will you find it? By preparing the statement of financial position, which is not called statement of financial position in incomplete records. Rather, it is called the statement of affairs. What is it called? Statement of affairs. Let's see. They want you to calculate the opening capital on 1st Jan. So that means they're asking you to make the opening statement of affairs. Statement of affairs is like the balance sheet. All the debit minus all the credit will give you your capital. That means your total assets minus your total outside liabilities will give you capital. So the way is that you find out what is debit, what is credit. From the debit minus your credit, you will get your capital. Let's check. Vehicles at cost is debit. Fixtures at cost is debit because it is an asset. Inventory is an asset, debit. Trade receivables is a current asset, debit. Other receivables. Other receivables has prepaid insurance. Again, it is an asset, debit. Trade payables is a current liability, credit. Bank overdraft is a current liability, credit. Bank loan is also, it is a liability, so it is credit. I want to find out capital. How will I find out capital? I will write all of this. I will write all of this. Now, what is debit? I will write it in the debit column. What is credit? I will write it in the credit column. So, vehicles is debit. Fixtures is 4,000 debit. Inventory is 9,200 debit. Other receivables, prepaid insurance is 6,500 debit. Trade payables is 200 credit. Bank overdraft 9,100 credit. And bank loan 10,000 credit. What I have to find out is capital. That will also come on the credit side. Now I will do my total. What is my total assets? It is 16,000 plus 4,000 plus 9,200 plus 6,500. So my total assets is 35,700. Total debit. So my total of debit is 35,700. What is my total of credit? Let's do the total of credit. 200 plus 9,100 plus 10,000. Total of credit is 19,300. From the total of debit, when you are subtracting your total of credit, that means from 35,700, when I am subtracting this 19,300, what I get is capital, which is my balancing figure, which is 16,400. Okay, and what I prepared is a statement of affairs. Let's do the next sum. What have they asked us to calculate? Capital. When I have to find out capital, that means a statement of affairs, all debit minus all credit. Premises at cost. What is it? Debit. Fixtures and fittings at cost. Debit. Inventory. Debit. It's a current asset. Trade payables is credit. Trade receivables is a current asset debit. Any loan is credit. Bank overdraft, if you have withdrawn more money from your bank than what you have, it is a current liability, credit. Now what will I do? I will write all of this over here. What I need to find out is capital. Capital will come on the credit side, I know this, and this will be my balancing figure. Now I will write the amount. Premises is 58,500. Fixtures and fittings is 9,400. Inventory 9,700. Trade payables 7,100. Trade receivables. Trade receivables is 8,120. Loan from Singh is 15,000. Bank overdraft is 5,300. I need to find out capital. So I will do my total of debit. So it is 500 plus 9,400 plus 9,700 plus 8,120. So it is 85,720. 85,720. I want to find my balancing figure. So my total of debit is 85,720. Now I will find my total of credit. 7,100 plus 15,000 plus 5,300. So total of credit is 27,400. From the debit total, when I am going to subtract my credit total, that means from 85,720, when I will subtract 27,400, I will get my capital, which is 58,320. Now let's talk about the format of capital account. It is very important format. C for capital, C for credit. Capital account always has a credit balance. I'm repeating, C for capital, C for credit. Capital account always has a credit balance. Opening capital on the same side, closing capital on the opposite side. C for capital, C for credit. Capital account always has a credit balance. Opening capital on the same side, closing capital on the opposite side. When I am writing capital, this is only for my reference. In my account, I will write balance begin down and I should understand it represents opening capital. Closing capital on the opposite side. I will write balance close down on the opposite side. That means on the debit side. And I should understand that this represents closing capital. Drawings will appear on the debit side. If there is any additional capital, it will be below the opening capital and I will write as cash bank. This account is maintained to find out profit mostly. So balancing figure will be profit. And then after that, when I close the account, I will bring down this over here and it will become balance brought down or begin down. And this will again become the opening capital. Okay.